Hi guys, today we're going to be looking at differences between neutral grids, long grids and short grids. That video assumes that you already know how the grids operate, or at least how the neutral grids operate. So if you're not familiar with the workings of the grid, please refer to our previous videos in the series. We have quite a few of them before this video. Once you familiarize yourself with how the grid works, you can come back to this video as it's one of the foundational videos in developing your grid trading strategy. Okay, so let's begin. Let's start with the neutral grid and recap its logic and strategy. So neutral grid, that the grid which initially places sell orders above the market price and buy orders below the market price, will profit from the volatility within the range of the grid. So as long as the price of this instrument stays within our grid range, you will profit from volatility of the price within this grid range. As the price will move inside the range, if the sell orders execute, the grid will place buy orders one level below. If the buy orders execute, it will place a sell order one level above. So basically, profit from those moves inside the grid range. But once again, when you're setting up a basic neutral grid, you are basically making a bet that the market is flat. There will be no bullish or bearish movement of the price, or at least that all those movements will be small, and the grid will stay inside the grid. The price of the instrument will stay inside the grid range, and it will profit from that. So basically, neutral grid profits from the volatility inside the range from the flat markets. Okay, that's kind of a basic theory of grid trading. Does it mean that if there is a clear bullish or bearish sentiment, the market is trending, or at least you believe it to be trending in one of the directions, does it mean that you cannot use grid trading and profit from the trending markets? Actually, no, it's quite the opposite. If your trading platform allows you to set up long or short grids, and it just so happens that Crypto app allows to do that, actually both on spot and derivatives exchanges, then you can profit from the either bullish or bearish directional market. How would you do that? So again, when the market is flat, or you believe the market will to be flat, you are setting up a neutral grid. But if you believe that the market is bullish and the market price will move up eventually, you choose the long grid. Kind of logical with the name that reflect your bullish opinion on the market, and this grid will profit from both as a normal grid would, when the market price stays within the grid range, it will profit from volatility here. But if the market price leaves the grid range, here it goes up, it will actually make you money, right, rather than lose it, how the neutral grid would, right? And the short grid works the other way around. It will also profit as both neutral and short grid and long grid from the price volatility inside the grid range. But if the price will leave the grid range and go down below it, you will actually make a profit too, rather than losing the money, right? So again, neutral grid profits from volatility inside the grid range, and if market price leaves the grid range and goes either up or down, you start losing money if you didn't stop it, because you basically left either with a positive or a negative position here, and if the price continues moving up or down, you'll be losing money in both directions, right? Long grid will profit from market price moving between the grid levels here, and if the market price leaves the grid range and goes higher, you will be making a good profit too. Whereas if it goes lower, your risk will be actually higher than the neutral grid, but more than that in the minute. So again, neutral grid profits from volatility inside the range, loses money when the price goes up or down, leaves the range. Long grid makes money here, and if the price goes higher, it's not losing money, it's actually making money on the way here. And short grid makes money both inside the grid range and when the price moves out of the grid range, right? And again, as I already mentioned, long and short grids, they have this option of making your money or profiting from if you are right and the market moves in the direction that you've chosen. So basically placing a long grid, you are placing a bet that the market will initially go up. And if you are right, you will be well regarded for that. However, if you are wrong and the price actually moves down, then you lose more money compared to a similar neutral grid, basically twice as much. Your risk will be twice higher. And the same with short grid, right? Placing a short grid, you are placing a bet that the market price will eventually move and leave the grid range and go lower. If that happens, you will make a good profit. However, if you are not correct and the market actually goes the other way around and the price moves higher, your risk is increased compared to a neutral grid, right? So that's in a nutshell when and why would you use the neutral long and short grid. Now let's go into tiny details of why that happens in the mechanics of the workings of the grid. And for that, I want to once again quickly recap the main points of how the neutral grid works. So once again, it places when it's initially set up, neutral grid places sell orders above the market price and buy orders below the market price, and leaving this actually the closest level to the market price without an order. And basically, if, for example, you can, so once you launch this grid, your position will be zero. No orders will execute immediately. Orders will start ordering and executing if the price goes and reaches this order and this order, right? So if there, so initially you'll have a neutral position. That's why it's called neutral grid. And for example, if you place this grid of 5 levels and placed BTC, let's place, let's say let's not place, let's imagine that we're placing 1 BTC on each level, for example, right? So the order size on each level is 1 BTC. So you launch the grid, the position is 0. If the market price goes up 2 levels, so you sold here 1 BTC and here 1 BTC, your position here is minus 2 BTC. So the amount of risk of your exposures here is minus 2 BTC. And if the price continues to go higher, you'll be losing the proportion amount on that position of minus 2 BTC. Whereas if price goes down, you'll buy here on BTC and here on BTC. Your position, the price leaves the grid range here, will be plus 2 BTC, right? But again, if the price goes lower, you'll be losing money on the position of 2 BTC, right? So that's how neutral grid would work. Let's just basically maybe even launch it and see whether I'm right or not, right? So I won't be launching with 1 BTC. Let's launch it with a small amount, right? Okay, it's launched. Let's see what happens here. Exactly as I predicted, or not predicted, but as I said, the grid placed 2 sell orders above the grid, placed 2 buy orders below the grid, and as no orders were executed, you can see the number of closed orders is 0. The grid position is 0. So basically, grid is neutral, right? So now, whenever price moves up or down, its position will increase. But if the price goes back to the place where it was, to the level where it was when we launched the grid, your position will still be neutral. That's why actually, you see on this level, we actually denote that that's your neutral position. It will be here. When the grid is here, the position will be neutral. If actually the grid is here, that will be your kind of position here, right? So as we have 0.001 BTC on each level, we have 0.002 BTC here, minus 0.002 BTC here position, and on this level you'll have a plus 0.002 BTC position. Okay, so that's the neutral grid in a nutshell. Let's go back now and now see what actually happens when we try to place a long grid. So once you switched from neutral to long, you will immediately notice that those orders, the sell orders of a neutral grid above the market price, turn green when you make it long. So what it means? So long grid initially places buy orders connected to its name, right? So you're expressing your bullish view on the market, so you place buy orders on all the grid levels. Of course, those orders being limit orders, their buy orders above the market price would immediately match against the order book and will fill, right? So basically, you're telling the exchange that you're ready to buy Bitcoin at much higher levels, and it will say, well, we can actually sell the Bitcoin to you cheaper. So those two orders will immediately execute, right? Of course, they will be replaced by sell orders, so the grid kind of will rebalance itself and become, come to a normal state where there are sell orders above the market price and buy orders below the market price. But initially, those two orders will execute, so that will give you a long position, right? So you buy here and buy here, two levels, actually at the market price, but basically two of the orders will execute, so we'll have a long initial position. That hence the name of the grid. It's a long grid. So initial position of the grid will be plus two levels. So again, if it's BTC and we place one BTC on each level, so initially you will have a long position of two BTC, right? And what will happen then? For example, so let's just imagine it in our mind. So here you have a position of two BTC. The price is here. You now have two sell orders here because those two buy orders executed and they were replaced with sell orders. So you have sell order here, sell order here. So if the price goes up, you have two BTC here, then you sell one here and sell one here. Okay, then your position here is zero. So that means that if the grid leaves your range and the price goes up, your position is zero and you don't have any risk, right? So basically, if the price continues to go up, you don't care really. You don't have any risk. Your position is zero. Whereas with neutral grid, you will continue to lose money. The price goes higher and higher and higher because your position will be negative. Actually, if the price leaves the grid range here. Okay. Moreover, given that you basically bought two BTC this price here, you send this grid, those two orders executed already at this price. So you bought BTC here, and if the market price goes up, you bought here, you sold one here and one here. You actually make a good profit because basically for one BTC you will make, so to say, one level of profit, but actually for the second BTC you'll make two levels of profit, right? So you bought here and sold here. Imagine if it wasn't a 5-level grid, but say 50-level grid. So again, it will make the same. So it will place buy orders everywhere. The buy orders above the market price will basically immediately execute, giving you a nice position of 25 BTC long, right? And if the price goes up, you'll be selling your 50 BTC one by one here, 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 here. The last one, so basically, you bought them here and you sold them here. So that's quite a nice move here, right? So if there are, this is the difference between two levels. So that difference is actually 25 times this amount. So it's not that bad. So you'll make a good profit. And of course, if the price of BTC before leaving the range and going up actually kind of fluctuates here, so you'll make additional profit as normal grid would on buying lower, selling higher within the grid range, and then once it leaves here, you'll sold all your BTC, your position is zero, and you're basically good to go, right? So you don't have any risk. So you're right. Congratulations, you expressed the bullish view, and the bullish view made you a lot of money. Okay. And of course, there is the other side to this story, right? So imagine, let's go back to 5-level grid. If you remember, if you placed a neutral grid right here, and the price with 1 BTC on each level, and the price left and went up, you will have 2 BTC, a position of 2 BTC, and the same way if the price went down, you will still have a position of 2 BTC. So you have risk on both sides, but it's basically, it's kind of, let's say the risk is half the grid, right? So you have 2 levels of risk here and 2 levels of risk here. If it's a long grid, on top, if you're right and the price goes higher, you don't have any risk here. So you will have a long position here, then you'll sell it here, you'll sell it here, here the position will be 0. Okay, but however, you already have 2 BTC here. Imagine what happens when the price goes down. You will buy another one here and another one here. So you will have a total of 4 BTC, position of positive 4 BTC when the price leaves the range and goes lower. So we'll have actually twice amount of the risk compared to neutral grid, right? And that's the kicker basically, and that's the main difference. That's the blessing and the curse, and that's the main difference. So again, on neutral grid, you are playing waiting that the market price will never leave the range, or at least it will stay within the range for a while, allow you to make money. If it leaves the range either up or down, you have risk on both sides, but your risk is basically kind of half the grid, right? With long grid, you'll make money inside the grid, and if the price goes up, you'll make a nice profit selling your bitcoins that you bought here, here, and here, and your position and risk will be 0. But if you're wrong, price goes lower, you'll have twice the risk compared to neutral grid. We'll have this example, not 2 BTC worth of position, but 4 BTC, right? Okay, let's now try to put that kind of in reality and launch this long grid and see how it works. Let's again erase this 1 BTC. Okay, actually, we already have one grid running on BTC. Let's move to ETH, for example. Let's launch a long grid on ETH. Let's pick their lowest order size, smallest order size. So once again, let's recap what we expected to do. We expected to place buy orders on all the levels, and we expect the orders above the market price to immediately execute and be replaced with sell orders, of course, and basically for the grid to have a long initial position, a positive initial position. Okay, let's launch this grid and see how that happens. Okay, here you go. Okay, it's actually working quite fast today. You already, if it would have been a bit slower, you could have seen it real time, but basically what happened here, you see, we have already 2 orders executed. There is a little 2 here. See, orders closed. Yep, there are 2 closed orders. Let's check. Yep, you can see the 2 buy orders that were initially placed above the market price were actually executed, right? And this is the price at which they were pretty much executed, right? So they were matched with the price, and we still have normal at the end 2 sell orders above the market price, 2 buy orders below the market price, but we already have a positive position, long position. So once again, it's a long grid, and you just launched it, you already have a long position, right? So we have at each level 0.004 ETH. So you have position which is size basically of 2 levels, right? So it's once again. So if the price moves up, you'll sell half of the position here and the rest here. and you'll have zero position here. That's why actually if you look here, let's just, okay, I'll change the scale. You see, that's why this level says neutral position. So once the market price reaches this level, you have a neutral position, you will have no risk here. Whereas if the market price will go down, so you will add to your already long position, you will add 0.004 ETH here and another 0.004 ETH here. That's the position that you will have, that basically twice the size of the current position, and you will be losing money if the market price goes lower. So that's in a nutshell a long grid. So once again, just remember that this grid is besides expressing your bullish position and profits when the price goes up, due to the nature of the establishing your position at these levels and then selling it here and here, maybe even higher if you have more levels. These grids tend to make a good part of their P&Ls, not when the price stays within the range, but when they actually leaves on those, when the grid realizes P&L from position established in these levels and it's sold in the much higher levels. That's where most of the P&L comes from. So normally, it will just, if your bullish view expressed by placing this long grid will be realized quite soon, say within minutes or hours rather than days, would likely end up with just 10 or 20% of the P&L being made from the movements inside the grid, and the rest will just realizing that P&L on the position established when the grid was launched. Of course, if it trades it stays within the range for longer, that proportion will shift, but that's just something to look forward to. And you will immediately see here the price will keep moving up, whereas in neutral grid, unrealized P&L almost always is negative. Here, actually, it will turn positive quite fast when the price will start rising. Okay, so that's their long grid. Let's just leave it here, sit here for a while. Let's go back, and now let's just speak about the short grid. Okay, let's go back to our BTC instrument. Okay, let's switch it to short, and now you already know, how kind of what long grid does. Short grid does pretty much the same, just in the opposite direction. So whereas long grid is placing buy orders initially on all levels, short grid places sell orders initially on all levels. And of course, the same kind of the same token as the long grid, here the sell orders which are placed below the market price will immediately fill, right? So you will sell. So if you, again, the order size I mentioned will be 1 BTC. This order and this order will immediately execute. You will sell 1 BTC and another BTC. So will have position of -2 BTC already when you just launched the grid. Of course, those orders will be replaced by the buy orders, and the grid will kind of come to balanced state and wait for the price to move. But once you launch it, you'll have immediately a negative position expressing your short views on the market. So if you have a position of -2 when the grid is launched, basically, and you will have those orders, those sales orders are replaced with buy orders. So you have -2 BTC position here, price goes down, you buy back 1 BTC at a lower price, and you buy back another BTC at a still lower price, and the price leaves the range. Your position neutral, you don't have any risk here, right? So you're right, congratulations, your bearish view on the market got realized. Whereas if the market goes the other way around, you already have -2 BTC position at this level, you'll sell another BTC here, another BTC here, and the market price goes up and leaves the range and goes higher. You'll have a nice negative position of -4 BTC, and you'll be losing money on them if the price goes up, right? Let's basically launch this short grid to make sure that it happens exactly as I'm saying. Let's choose another instrument for that where we don't have a position yet. And again, let's pick a smaller size of 1 AVAX here, right? And let's launch it and let's see what happens here. Okay, again, as with the long grid, we immediately can see the 2 orders executed. So the grid initially placed 2 sell orders below the market price. They got filled, right? You can see here, yep, those sell orders got filled already. And you have a nice position of -2 AVAX, right? You sold here and sold here. -2 AVAX is your position. That's why the grid is called short. You're pressing short view. If the market price now continues to fall, you'll buy back one of your AVAX here, the lower price, and another one still lower price. And as you can see here, once the market price reaches this level, your position will become neutral, right? You'll have 0 AVAX, and the price continues to fall. You won't be losing any money. You'll just make money on the position you established here and sold at lower levels. And again, if you're wrong and the market price keeps rising, you'll have twice the risk. So you already have 2 AVAX, you sell -2 AVAX here, you'll sell another one here, another one here, you'll have -4 AVAX when the price leaves the range and goes higher. And basically you'll have twice the amount of risk than you would have if you have launched a neutral grid here instead of short. Okay, let's go back and recap. So once again, there are three main types of grids. Neutral grid that will profit from the price volatility within the range. So placing a neutral grid, you're basically making a bet that the price will stay within the range for the time of the grid runs. You will, if you're wrong, the price leaves the grid range, either it goes higher or lower, you will lose money on both sides, right? You don't want that, but you'll lose, say, half of the grid money worth. Whereas there are long grid and short grids. So long grid, by placing it, you are making a bet that the market price will go higher. It will initially leave the grid range and go above it. You will profit from that if that happens. But if you are wrong and the market price goes lower, you will have twice the amount of risk that you would have if you place a neutral grid. The same with short grid, just vice versa. You are making a bet by placing it that the market price will initially go lower. If that happens, you won't have any risk and you will profit nicely. If you're wrong and the market price goes higher, you'll have twice the amount of risk you would have had you placed a neutral grid instead of it. Okay, in a nutshell, that's the difference between long, neutral, and short grid. It's very important to have all of them in your arsenal of grid trader so that you would not be, losing out on the opportunities of the market is directional. And we know market is directional for a lot of long periods of time. And long and short grids give you a nice opportunity to profit from those moves. Of course, there's always risk management and paramount, and with long short grids, even more so, because there, if you're wrong, you're basically having twice the risk compared to neutral grids. Okay, now we kind of covered the basic theory of neutral, long, and short grids. Now let's just look at some peculiarities using those grids first on spot exchanges and then on derivative exchanges. Okay, now let's look at launching short and long grids on spot exchanges. Let's move to spot instrument. Okay, now we're on BTC, but on spot BTC. Okay, here basically the principles or the logic of how long, neutral, and short grids work, it's exactly the same, whether, irrespective of instrument, whether it's spot and derivatives. So the only difference is with if we launch in a neutral grid on a spot exchange, right, as it will place initially sell orders here and buy orders here, you need both base and quoted currency, in this case BTC and USDT, to launch the grid, because for those sell orders to be placed above the market price, you need something to sell. In this case, you need to have BTC on hand to sell it, right? And you have USDT on hand. You have to have USDT on hand to place those buy orders. So we will be able to buy when the price reaches those levels. So you need both BTC and USDT, or again, base and a quoted currency, even if you're launching a neutral grid on spot exchange. And if you go lower, you can actually see here. So if we say place an order size, or choose the order size, you immediately see that the grid says that basically you need funds for both in BTC and USDT. Moreover, it says basically you need BTC for 2 grid levels and another in USDT for another 2 grid levels, and calculates how much actually you have. But basically, to launch a neutral grid, to express your neutral view on the market, on the spot market, you'll need to have already on hand some BTC and USDT. Basically, you have them. That basically says that you're irrelevant. You're like, you don't care about, kind of placing them in the grid, because you believe that everything will stay the same. You, in the end, have those BTC and USDT will have the same value. You just you'll profit from volatility inside the range. Okay. What if you actually place long grid on spot exchange? Now, remember, you only place in initially buy orders. So, and you're buying with what? Of course, you are buying with USDT, right? So basically, that means that to place a long grid on a spot exchange, you don't need base currency, you don't need BTC, right? Let's double check it. Yep. Now we see that, we don't need BTC, we only need USDT, which is absolutely correct, right? Okay, good. What does it mean? Now, first, it means that basically, whereas to launch a neutral grid on any of their spot instruments, you need to have those coins. So if you want to trade not BTC, but some, exotic coin, I don't know, whatever, AE, right? Or I don't know, some other stuff like wherever that is, ALCX, right? Sorry for the guys who know what it is. It's just, some random coin on Binance. So to place a neutral grid here, you need to have that ALCX, right? To place it if you are placing a neutral grid. However, if you're placing a long grid, as you will be only placing buy orders, right? So you don't need that coin. You only need to use BUSD in this case, quoted currency. So that's kind of one logical conclusion of launching long grids on the spot exchanges. However, I have to warn you, that is if you had the time and energy to actually stick with me till this time. So that's very important. A lot of bots offered by the exchanges themselves and some of our competitors as well. They basically, to make the trading on spot with grids easier, what we'll do, they will have some kind of a checkbox that just says, you're launching their neutral grid. So very few exchanges, I think none of the exchanges have very few now of our competitors support both, neutral and long and short grids on spot exchanges. So usually you would just be launching neutral grid here, but it will have some small checkbox. It will say, buy coins when you launch it. So that basically kind of looks, or at least most users perceive it as a kind of very, very useful or very easy thing to launch the grid. So that's some kind of, there just it looks like this function is there for your comfort, like to make life easier. But it's not really the case. What the exchange doesn't tell you is that, but by buying the coins before you launch the grid, you're expressing your view on the market, right? you're basically establishing a long position, right? So you're doing exactly what our long grid does. You basically, long grid will execute a couple of orders and establish your long position, basically buy the coins for you. So when exchange buys the coins for you to launch a grid on spot, you are, without knowing it, basically launching the long grid. It means you have twice the amount of risk, and if the market price goes higher, that's okay. You'll make money and everybody was happy. But what you don't probably realize is that, as I said, as I explained about the long grid, if the market price goes lower, then you have twice the amount of risk, right? So you already bought some coins and you'll buy more on the way down, you'll have double the amount of coins. So again, don't be fooled by the exchange bots. They just, when you trade on spot, they tell you, okay, we'll just, check this checkbox and we'll buy the coins for you. What you're doing, you're actually placing a long grid without probably realizing that. So, right, so we are kind of upfront about it. So we show you that if you want to trade on spot with grids without using your coins, you will be placing a long grid. Basically, you will be expressing a long view. You'll be buying base currency or coins at the beginning, and if the price goes up, it's okay. You'll make a nice profit. But again, remember that the price goes down, you'll lose twice that amount. That's very important to understand. So again, that was the long grid on spot, and now looks at short by the same token. Short grid, as it only places sell orders, it only requires BTC here, right? So for all the four levels, it will need only BTC, right? So we are selling on all levels, so you only need BTC to sell. So to recap, on spot exchanges, if you place a neutral grid, you'll need both base and quoted currency for the sell and buy orders. Effectively, if you place in long grid, you will only need quoted currency, so USDT or BUSD or whatever it's quoted in. And with a short grid, you only need the base currency of BTC, for example, in this case, right? So one other thing to consider on here is that it's not always with spot. It's not always coins versus USDT, right? For example, you could trade a pair, something like, for example, ETH BTC, right? ETH BTC. Where is ETH BTC? Sorry, ETH BTC here. So, right, and you might have, it's a good pair to trade. The correlation is there. It will not move as much as BTC or if against the USDT, so we'll stay in range for a while. Here, basically, you can choose, if you have just ETH for BTC, you can basically express your attitude towards, in the long run, you expect the ETH, to overcome BTC or BTC to overcome ETH by using, neutral or short or long bots, right? So in this case, for neutral bot, you'll have to have both ETH and BTC. For long, you'll only need ETH, and for short, you only need BTC. Okay, that was a recap of the grids, short, long, and neutral grid on spot exchanges. Now let's move to derivatives exchanges yet again. Let's go back, for example, to this instrument here, BTC, that's a futures instrument. Basically, we've covered the basic theory of what neutral, long, and short grid is. On futures or on derivatives, you don't have to worry about base and currency too much. As you remember, everything is basically settled in there in the settlement currency. That in this case it's BUSD. So you only have to have BUSD for all three of them: neutral, long, and short grids, which is kind of logical and much easier. Actually, it's actually one way to think about it. If you want to trade without leverage, we don't want to use derivatives because of the leverage, but you are not prepared to deal with all these strangeness of trading on grids on spot, you can actually choose derivatives just without any leverage. Set the leverage to 1, and it basically will trade without any leverage, without any added risk, but with the basically with the comfort of having just one currency that everything is settled in, and it's kind of easy to jump between the coins, between the instruments. Okay, so the only difference with, or the only specifics about trading with long or short grids on derivatives is when you encounter a hedge mode. So let's switch to exchange with which I have the hedge mode on. So for example, Bybit futures, as actually many other exchanges, offers hedge mode for many instruments. What that means that on a single instrument you can have at the same time both long and short positions, right? Whereas without hedge mode, you can only have either long or short position normally. So if you are trading an instrument with a hedge mode, first, if you don't know what it is and you don't need it, just basically don't fret or don't think about it too much. However, some exchanges have it on by default, so maybe it's better to understand what it means. So how to first to see whether the instrument is in hedge mode or not? It's easy. We show you here. If we show you here 2 positions, that means this instrument is in hedge mode. So you can have both long and short positions at the same time. For example, on the same exchange, we will switch to, say, BTC USD. That's inverse perpetual future. You can see here that there is only one position, right? It's closed. It can be either short or long, so we just say it's closed or open, but there can be only one. Whereas on BTC USDT, the hedge mode is on, so you can have both of them. So what happens here? So basically, there are 2 things to consider. First, on Bybit especially, you want to make sure that you have the same leverage for both long and short. In this case, it's 20x. It's correct, but if you just change the leverage here, it will change it only for the short position. It won't change it for the long position. It's still 20. So you want to make sure that you have same leverage in both positions. And the second, if you are launching here a neutral grid, right? So it will be placing initially, if you have 0 position both long and short, and initially it will place in buy orders into long position and short orders, sell orders into short position. So you launch this grid, it places buy orders and marks them with long position side. Position side is marked there as long, and the sell orders are marked there as short. It's the only way to do it. Actually, when you have a hedge mode on, you cannot actually, if your short position is closed, you cannot buy into that short position. You can only sell, so you can only increase the price. So you cannot have negative position, short position. Have a position of 1 BTC in short position is impossible. It just doesn't make any sense, right? So again, if the neutral grid is launched and buy orders are executed, they will be increasing your long position. So if the price moves here, this order executes, you'll have a long position of 1 BTC, and there will be opposite order, sell order placed here. If it executes, it will close that long position, right? So when it's back here, the price is back here, your positions are 0. And the price continues to move up, and those sell orders execute, they will actually increase your short position, right? So, and then if the opposite buy orders execute that were put as a response to those orders executing, it will close that short position. So in short, sorry for the pun, neutral grid is placing orders and is trading at the same time in both long and short positions. What that also means is that you cannot actually put or place 2 grids on the same instrument, 2 neutral grids on the same instrument, right? We will ask why that is the case. Well, there could be instances when you want to put it. For example, if you have also activation price, maybe you want to put them on different levels. For example, I don't know, we want to put one grid here, one grid here. You cannot do that if it's a neutral grid and there is a hedge mode on, right? Whereas if you just choose a long grid here, so all the orders initially are buy, so all of them will execute in the long position, and all the orders that are put as a response to the execution, so the sell orders, will just decrease the long position. So long grid in hedge mode on derivatives will always trade just in the long position. And by the same token, the short grid, it will initially place the sell orders. They will all execute and go to the short position. They will increase short position. And then as their buy orders execute, the short position will decrease until it goes back to zero. So short grid will always trade in short position in hedge mode. What that means, first, you can, for example, you can place a short grid to trade in short position, but if you want to express a long or short-term long view, you can actually manually trade in long position without affecting the short grid. Or if your grid is long and is trading in long position and you have a short-term short view, you can actually express it by placing orders in a short position without affecting the grid. That's one thing. And the second thing is that actually you can place both two grids in the same instruments, for example, one long and one short. Again, you might want to place a big, there might be reasons to place them like that. For example, one here, another one here. You can do that. So you can have two grids on the same instrument as long as one is long grid and the second one is in short grid and the instrument in the hedge mode. Okay, here is that's all I had to say about the different types of grid on derivatives. So let's just recap everything. Today we learned that there are two main types of grid: neutral, long, and short. Neutral, by placing a neutral grid, you are making a bet that the market will stay flat, will stay in range within the grid range for a while without moving too much into any direction. Whereas if you want to express a bullish view, so basically you expect to market price to eventually move higher and leave the grid range and go higher, you can place a long grid. Or if you want to express your bearish view and expect the market price eventually to leave the grid range and go lower, you can place a short grid, right? That will profit if that happens. Long and short grid, whereas neutral grid has risk on both sides. If the market price leaves on both sides, it has risk on both sides. A long and short grid don't have risk only one side, right? For long grid, if the market price moves higher, there is no risk. If the market price moves lower, there is twice the risk that comparable neutral grid has, and same with short, just vice versa. Short grid, if the market price falls below the grid level, the grid range, it doesn't have any risk. But if it moves higher, leaves the grid range and moves higher, it have twice the amount of risk that the comparable neutral grid have. Okay, and last but not least, just remember then when you are trading spot instrument and you're placing neutral grid there, you need both base and quoted currency to launch it. However, you can launch it without having the base currency, or in this case, without having any BTC, by choosing long grid. Just remember, by doing that, you're placing a long view on the market or a bearish view on the market. And if you're trading not with GoodCrypto but with some competitor's bot or with an exchange bot that just doesn't specify whether it's a neutral long bot, it just has this checkbox of buy coins to launch the bot. That means actually, without realizing that, you are probably placing a long bot and expressing a long view. So just be aware of your risks and opportunities of what you're doing on the spot exchanges. Okay, thank you very much for watching, guys. Sorry for being probably not very structured and taking too long to explain that, but that's very important. I think those if you master three types of the grid, that will enable you to profit in many situations and not to lose money in many situations, and will expand the range or the number of times and a number of situations where you can profit from grid trading. Once again, that was all shown and on the example of GoodCrypto app, which is a multi-exchange trading terminal. We support all centralized spot and derivatives crypto exchanges, and we offer the best functionality in the market at the lowest price in the market, and we offer 14 days free trial, so don't hesitate to take advantage of this opportunity. Thank you.